The trick of getting the price down, buying at as low price as possible, and reselling it to the highest bidder if, in such extraordinary situations, they had another asset that would definitely grow, for example Bitcoin. And compared to the illegal cryptocurrency market, it's like a drop in the ocean. Glad to welcome you to the Coin Post channel. The good news for those who are waiting for cheap bitcoins is that they have a strong ally in the face of the investment bank Goldman Sachs. To cut a long story short, the trick of getting the price down, buying at as low price as possible, and reselling it to the highest bidder is a common strategy for a bank, especially one as large as Goldman Sachs. And is the only reasonable explanation for the presentation that the bank gave to its customers, where it intentionally tried to demonize Bitcoin. The way I see it, the story deserves a separate video. I suggest we go through the arguments of Goldman Sachs against Bitcoin and give a decent answer to them. Do not miss the competition for 1 million Satoshi in Bitcoin. Subscribe to our channel. Let's begin. In total, Goldman Sachs found, or just came up with, whatever you like, 5 shortcomings and 2 problems. So a total of 7 reasons why cryptocurrencies cannot be considered assets. The first one is that Bitcoin doesn't generate cash flows, as bonds do. One of the Winklevoss twin brothers gave a perfect answer to this question. Bitcoin doesn't work like bonds, because it is not bonds. That simple. Still, here are some statistics in 2019. There were transferred $673 billion through the Bitcoin network. And it's not just the amount in dollars for all transactions. It's a unique calculation except for the money transfers inside the exchange or between the wallets of one user. I would also like to add something I said, and I'll repeat it again. Trading Bitcoin on the stock exchange is at the forefront, and it may seem that nothing else is happening. However, the crypto industry has successfully existed for a long time, and companies make payments in bitcoins, pay salaries in the cryptocurrency, and then make purchases using these funds. If it's not cash flows, then what? But I think I understand what Goldman Sachs meant. They are concerned that cash flows in bitcoins pass by banks. Issue number 2 is Bitcoin doesn't take part in GDP growth, thereby not generating income for the global economy. To avoid repetition about salaries and purchases for cryptocurrency, I'm gonna tell you about mining. I am sure that Goldman Sachs analysts are well aware of how much electricity the Bitcoin network consumes, and you have to pay for it. Electricity can be considered the final product, that is, part of the GDP, and those who consume it are in the overall economic chain. I'd like to point out that Bitcoin mining doesn't take energy from other industries. We don't cause power cuts in kindergartens around the world when getting another Bitcoin. People do not sit underground all night on a train because someone decided to mine and there was no power left for the train. When Bitcoin is criticized how much electricity we spend on mining, they forget to mention that there is an overproduction of electricity in the world. Of course, you can either close the extra power plants and fire the workers, or let the night lighting work around the clock just to spend electricity. Or you can mine Bitcoin and generate income for the energy industry. Let everyone choose what they want. The third drawback of Bitcoin, according to bankers, is that it doesn't have a stable correlation with other assets, making cryptocurrency difficult to use for diversification. This is the best illustration of how bankers work. They want to do everything on an algorithm. The economy is growing, we're buying stocks. The economy is crumbling, we are converting funds into gold. Today, the economy is in extremely poor condition, but the stock market keeps growing as the central banks are pumping money into the economy. And at the same time, the gold price is also increasing because not everyone believes that central banks will be able to fight the crisis, and the stock market will not collapse again. I believe Goldman Sachs would be thrilled if, in such extraordinary situations, they had another asset that would definitely grow, for example Bitcoin. But they're used to relying on historical facts, and since it's the first financial crisis for Bitcoin, the bank simply doesn't know how it's gonna behave and therefore cannot use it for diversification. Goldman Sachs analysts are particularly worried by the fact that on March the 12th, Bitcoin dropped by 37%. For some reason they forget to mention that the stock market and gold fell sharply on the same day, and for some reason They don't say anything for the recent oil price that plummeted to minus $37 per barrel. It's also very high volatility, right? I must say that for traditional markets, such events are more of an exception, and trading is usually calmer there than on cryptocurrency exchanges. But there is a lot more money there, and therefore something really important must happen to move the market forward. Over time, as the cryptocurrency market grows and its overall capitalization increases, volatility will drop significantly. But Bitcoin is only 11 years old, and the fact that the entire industry around it has formed in such a short period of time speaks volumes. Bankers don't think Bitcoin can protect against inflation, which means they cannot consider cryptocurrencies a hedge asset. There really is one problem. Purchasing for Bitcoins is still a pretty small sector, and in most cases we need to convert it to fiat. And the faster fiat becomes cheaper, the less you can buy for Bitcoin. To get ahead of this inflation, the price of cryptocurrency must grow faster than the dollar depreciates, and so far, we're managing the situation. We also have examples of how in Venezuela, Argentina, and Turkey, the demand for Bitcoin skyrocketed as a means of protection against inflation in the national currency collapse. The first thing that people do in this case today is they buy dollars. But there's a lack of them for everyone, and the state often restricts access to foreign currencies. So people have to look for an alternative, and this alternative could be Bitcoin. As for Bitcoin inflation itself, after the halving on May 11th, the annual rate is less than 2%, even though the global inflation rate is 3.5%. And in the next few years, this figure will remain approximately the same if it doesn't grow due to the activation of central banks' printing machines. In 4 years, Bitcoin is expected to have another mining, which will cut in half Bitcoin's inflation rate, and then another one, and so on. Those who watched the Goldman Sachs presentation may note two more critical problems with Bitcoin. To begin with, the declared limited issue of 21 million coins doesn't match reality due to various forks. In general, such a problem does exist, in the sense that Bitcoin Cash or Litecoin offer the same thing, and in theory, increase the overall market supply. But any market has duplicate offers, and each product has its own buyer. In theory, you can launch an unlimited number of Bitcoin forks, which doesn't mean that there will be more Bitcoins. After all, it's essential to take into account demand, trust, and application. According to them, Bitcoin has no competitors, and this makes it unique. And the second point is, but let me first remind you of the opportunity to support our channel by subscribing and turning on the notifications. There is more exciting content coming. So, poor bankers are too hung up on the fact that Bitcoin could be used for illegal transactions, such as selling prohibited goods on the darknet. And I have a question for them. If they are so law-abiding, then why use the dollar? After all, no matter how many tales there are about Bitcoin, it's through the help of dollars that the vast majority of prohibited transactions are carried out. And compared to the illegal cryptocurrency market, it's like a drop in the ocean. It's weird though. Why then Goldman Sachs doesn't advise its customers to get rid of dollars? And why they won't? Maybe the reason is that Goldman Sachs already got into trouble for illegal transactions and paid a fine of $6 billion? More than that, the leading world banks regularly appear in money laundering scandals, spend billions of dollars in fines for this, but still keep working. Why are they not shut down for something like that? Maybe because all these fines are sort of a kickback. You make money on illegal transactions, send a part of the amount to the treasury in the form of a fine, and keep working. Still, the bad guy here is Bitcoin. Remember? Bitcoin, not the banks. Banks and dollars are the good guys. And that's it for today. Thank you for watching. It's the Coin Post channel. Subscribe and get enlightened.